Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're going to look at here is a chart of the market. This is the Mini S&P 500 futures contract, front month in nature. Looking at the last print of 1373.25. As you can see, we've had simply a trailing higher since essentially the mid-December lows. We've actually rallied almost 200 points off the 1200 level. We had this inverted H&S set up here after making a higher low. So it's been a pretty impressive run, particularly for our longer term positions. Having said that, when we get these narrow range bars, it's generally not the best trading opportunity. So it's been kind of quiet. We've had probably the least amount of volatility in our portfolios that we've seen in quite some time. Having said that, if you look back over, what's interesting as we're looking at a chart of the daily market, what's interesting is that you have this rally of 200 points almost, 1200 essentially to 1375. And if you scroll back just a little bit, look at this right here. We have the same exact thing. Now, traders, as we've mentioned, really do like to follow the herd. They like to follow the patterns. They like the simplicity. Who doesn't? But we have this lower, again, higher low here in 2010, in late 2010, September. And what was interesting is we also had a rally of 200 points, 1,000 to 200. We had just a 50-point pullback, just our key intermediate term EMA right here. And then we had another 200-point rally from 1150 to 1350 almost. So kind of that's what we're looking for. You had this 200-point rally, a little bit of a pullback, another 200-point rally. Fast forward to now, and it's the same, it's a similar price action. That's the main thing, is you have these narrow, small little trails higher, and then it finally gets some expansion there. And more small little narrow range climbs where the market is just climbing, and it's exactly what you have here. Sorry for that. Looking at these expansive range days, we really make quite a bit of money on these expanded range days. And again, as we mentioned, although many of our portfolios are at equity highs, we'll look at some of our key trading models in a second. We've seen very low volatility, so we're looking for some expansion. We should get a move back to this intermediate term measure of trend following support resistance right around 1300 to 1320. In fact, that's what we've informed our clients, that once we get a pullback to the 1300 to 1320 level, we're going to be looking to add more exposure. We've already reached our first target. As you see, we went, or as you know, if you're following these videos, we went unofficially bullish around 11:30, I believe. Officially bullish in terms of market timing, couldn't go until 12:30 or so. And of course, now we're at 1373, so 150-point gain or so. But we've reached our first target, which I believe was 1350, 1340 to 1360 zone. 1350, we're actually back up to a 1370 level. The market's kind of holding around 1370, 1380. Again, we'd like to get a jump to 1400, a quick move to 1400, just like what happened in late 2010, and then followed by a swoon to at least retrace to 1350, maybe even 1340, at which point we would add back more exposure for the run to our next target, which is 1400 to 1440. In terms of, this is very, unusual. You have momentum looking rather normal in our moving average convergence divergence indicator, and you can see it is just flatlined. I mean, there's nothing going on. It's very unusual for the indicator. Essentially, it just went into the doghouse. It's just done nothing. It's died. And in terms of directional movement, again, gray status are the biases, albeit bullish. Their gray status as the intermediate term has certainly rolled over, as the short term has declined as well. But those are indications from a daily perspective. We are still 100% bullish and have no reason not to be bullish. So we're going to go ahead and switch over, I guess, and look at, here's our free equity call ratio VIX system. Just one little quick stop loss. Doesn't trade that much, but you guys can trade this for free. And we'll go ahead and pull the strategy performance report and see what that's looking like. There we go. Not too bad. Not too bad over the last 9 years. 10 to 1 reward to risk, to maximum risk. $120,000 versus $12,000 maximum drawdown. And there you see the equity graph. Pretty interesting. So we're going to go ahead and switch over now. We'll go ahead and minimize that. And pulling that up, actually we should look rather quickly at the not sure why we got that, because we're not looking at it. Sorry for that. Where did it go? Oh, there we go. So, in quickly looking at the call volume ratio of the equities, which we track, we're essentially right in the neutral zone. You're not seeing any complacency. That's suggesting that this market could go higher. This is the mini Russell futures contract looking at 820. Again, the price here is simply topped out at 830. Every time this market gets to 830, you can just, it's like shooting fish in a barrel. You can just sell it. 830, sell, boom, 820. 830, sell, boom, 815. Boom, 830 sell. Yesterday we got down to 807. So it's essentially like shooting fish in a barrel. As you can see, clearly defined. One could argue market top, but we'll see where we go. Essentially, we're consolidating. We may need to again pull back a little bit to break through the key level. This is suggesting that we're actually getting a little tick up in fear, and actually there as well, we're definitely not seeing complacency, which would suggest the market's going to go lower. So it's very interesting seeing a little bit of complacency in the VIX, but that can certainly go lower for a while. And looking at EVR3 VSR goes long today. Gets up to about the 24 level, which is kind of 2350 is kind of a key level in the Russell. 24 you can actually see yesterday or the day before, 2 days before, 24, 24, 24, 24, up to close to 24, break up, break back below 24. Now we're retesting 24. So it goes longs at 20 to 24. Probably not the best trade setup that you've ever seen in your life. In fact, it's back to break even. But having said that, when you look over the last, oh wow, 4 years? 4 years? $85,000 this trading model's made. Maximum drawdown just $5,450. $292 every time expected every time you place a trade. And there's the equity line, the equity curve right there. Pretty impressive, but today's trade not the best. MRSE and PTL at new equity highs. We love seeing these green dots, green dots, green dots, green dots, green dots. EMDS, green dots. That had a couple flat trades. Green dots, R30C. And coming off a little bit, R30B, R30A, green dot. EVR3, green dot. EVMCM, right up around the green dots. IRSD, right up very near green dots. We actually got a short position in the IRSD. CBR hovering above, hovering right at the green dots. ES30MX, that did have that nasty drawdown last August, but it's recovering. It is recovering over time, and as you know, that was the credit crisis. These events are pretty rare. Closed out a couple winners right there. ESM30, another winner right there. A couple winners right there. Again, recovering, much like the ES30X, ES30MX. And then here's pretty good. This is the ISR. Look at this trade right here. It's a couple losses, pretty nasty, but look at this beautiful buy setup. I'm not sure why that's not displaying. Buy at 1260. Yeah, we're at 1370. Pretty nice gain for this long position this model's been holding. So that's a quick look at the systems. We actually need to keep on moving. And here's a quick look at the intraday. There's that sell-off you're seeing that we begin to see in the TF from 24 down to 20. Just essentially a flat market. That's why we haven't seen much volatility. Just kind of been biding our time. But here's the key factor. You really have to stick to it. You never know when that day is going to come where you're going to make 80% of your profits on just 10 to 20% of the trading days. 80 to 90% of your profits on 10 to 20% of the trading days. So you have to get through these days where you're just our MBO Matt Black original, has been making like $400, losing like $400. I mean, really, a lot of our swings have been hedged, netting out zero exposure. So it's been pretty interesting. But having said that, there have been some tradable, particularly discretionary moves, certainly aforementioned. And as you can look here on this Thursday, the first day of March 2012, I'm not sure I mentioned that, we do have overwhelming bullishness. Bullish, 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 bullish. I mean, it's just overwhelming bullishness. So you definitely want to buy. Why is the market going lower? Well, that's really unexplained at this point, since you do have extreme bullishness, that's bearish bullishness, overwhelming bullishness. This really should be pulling back, but I think it could be getting tired. I mean, the market has gone straight up for 3 months almost. I mean, it's really been impressive, and we're gonna start getting those expansive days. That's when we're really gonna make our money. But right now, again, the market should be going higher. But again, that 1270 1280 level has really been resistance for the ES. As you saw, the market dropped to 58 yesterday, but again recovered. So there's so much money wanting to be put to work in the U.S. stock market that it's just unbelievable. And again, we expect another run of 200 points ultimately based on just what we saw in 2010. So it should be interesting. Free informational day trade, yes, certainly go ahead and buy it 1272 or 20 in the. You can take that trade off the EVR3 VSR and buy it 20 on the Russell contract 72 here. Quick stops, whatever you're comfortable with, a couple $300, and go ahead and just hold it. It's about 2:30 Eastern Standard Time, so go ahead and hold that to see where we get. If we get a blast to the upside, even had to sell off this morning, the 10 a.m. report, but then the market's clawed back. So it's very interesting. Very interesting price action that we do have. So we're going to go ahead and minimize this and hope we don't go to a blank screen. It's just really been quiet, particularly for our EVO. We're just really not getting any trades. So there's the Russell contract. You can go ahead and buy it 20. And yeah, you can target 24. Quick $400 for a first position, and then go ahead and exit the rest around 28. 28 to 30, so it's a pretty good setup. Obviously below 15, definitely be getting nervous, but that's been pretty strong support around 1250, aforementioned couple of swing lows, so pretty impressive, pretty interesting. We'll go ahead and minimize that, and we're looking at our Platinum Reserve 100. That's a few of the models that we were just looking at, all those green dots. That's a few of the models. It's a $100,000 portfolio, $35,000 maximum drawdown. That's 35% of the initial equity. As a percentage of the total equity, as the portfolio grows, the maximum drawdown was just 14% of the total equity. So that 35,000 was just 14% at the time, wherever the equity was, around probably here 300,000 or so. Oh, we're getting something to pop up. I'm not sure what that was. So that's the Platinum Reserve 100. Beautiful models. Again, these have not been offered to the public. We still offer, the MAPDT is closed. MSAUDT is open. As you guys know, those portfolios have been outstanding. MAPDT 500% led last year, 500% return over the last 228 days, 430% for the MSAUDT, Delta TTS up 400%. A few of these still qualify for the double your money back guarantee. If we don't double your money, you get your subscription fee back, the fee that you pay us for a yearly model. That's for 2012. Unbelievable deal, and not too many people are out there saying we'll double your money or your money back. So that's a pretty impressive guarantee. But when you're putting up returns in the triple digits, the mid triple digits, then you can certainly back up your claims and these are real world tracking. These are from Strategy Runner. These are the portfolios. These don't include slippage and commissions, but arguably they just don't include commissions because Strategy Runner does an outstanding job of reporting almost a very actual, close to real world fills that you can get in their software, so it's been pretty impressive in terms of accuracy of real world trading. The MB250K, you could trade this with either $100,000 or $250,000. As you can see, it trades up to 47 contracts. The maximum drawdown 37.78% on the 250. There'll be about 95% on the $100,000 version, so it's certainly risk capital. But again, just 11.14% of the actual equity at the time. And this again is after slippage and commissions. And of course, we wouldn't have been in business for almost a decade had we ever exercised in any sort of curve fitting the data just to show to the public, hey, this system looks amazing. We have no desire, and it's the exact opposite. We have every desire to not ever even come close to curve fitting any sort of data. All of our data, all of our models are walked forward. They're walked backwards. They're tested in real live, and we actually trade these models. So we wouldn't do all those components if we were ever seeking to optimize and idealize data. And that's certainly not what you see here, and that's not how you get these sort of returns. Again, as tracked by a Strategy Runner. Not sure where that went. Where did that go? Oh, there we go. As tracked by Strategy Runner. Again, these are real live trade signals sent and represented. Again, the fills almost identical to our actual fills, so you don't get these kind of numbers without doing exactly what you need to be doing, and that's developing trading models that absolutely will continue to work in the real world. And what's more, as the markets change, we're always on the evolution in innovating our trading models and new ideas, and that the markets are now maybe entertaining. I mean, the markets are ever changing, they're dynamic, they're alive, and that's really our approach, is to develop 2 to 4 new trading models each year that are robust and have been thoroughly tested and traded and tracked. And again, that's how you get real-time tracking returns of 451% over 228 days. So if you guys are interested in any of these models, you can trade 5,000 in risk capital, 10,000, 15,000, 25,000 in risk capital, 50,000, 100,000, 250,000. Those are our portfolios. If you have any questions on how to get set up, all you have to do is subscribe, shoot us an email to admin@MiniAnalyst.com, go to the website, chat with the support team. If you have any questions on how to get set up, the brokers will manage your account on your behalf. It's full automation. All they do is set up the portfolios and monitor them. It's near instant execution. So it's really an amazing thing. You essentially only have to have an account that's funded. Everything is taken care of for you. What's more, when you become a yearly member of a certain select few portfolios, EVR3, any EVR350 portfolio, the MB250, MB100, the PR100, MSAUDD, Delta DTS, MAPDT is closed. Any of those portfolios do apply and you become a yearly member, you do get the double your money guarantee. What's more, you're going to save 22% on your commissions if you become a yearly member. So it's really an amazing thing. And what's more, I'm going to try to say that again. What's interesting is you can go to the website. I'm not sure if you can go to the website, but this will be in the email that you're getting as an alert for this video, and it essentially works out to $27 a month per contract, and it's usually $100 a month. Most people, a cheap trading system is about $100 a month. These work out with well, certainly about 15 years of research work behind it, and you're just paying about $27 on average per month, and you're guaranteed to double your money. So it's a pretty interesting opportunity. If you guys have any questions, again, use the aforementioned information. Hope you have enjoyed the video, and we'll see you next time.